All right, welcome back everyone. This is Sunday, November 16th, and this is the weekly DeFi finds. And to be honest, I am slowly leaning towards adjusting the name of the weekly videos and even changing the concept a little bit to fit more general market overview using data, charts, rather than focusing specifically for DeFi because, well, you have a daily highlights, you have DeFi pools updates on a daily basis. So I don't think that weekly episodes should also focus only on DeFi. So slowly I will start experimenting, and because we are now finishing off the whole general plan of the expansion, there will be a bit of a more interesting points here and there coming very soon. So this will align pretty nicely. Okay, so anyways, today's episode is, well, the market is not the greatest, to be honest. If we open up the chart, I know you can't see the very top, but you can definitely see the chart itself, so I think that's good enough. This is ETH, and as I mentioned before, upon drawing these areas, right, well, if we can't sustain this region on ETH, it's not good. And as you can see, exactly this happened. Even though we reacted very nicely within the region, it basically acted as a break and retest, and now we are continuing going down, which is something I don't prefer seeing at the current market situation. So it doesn't mean that the market is changing direction long term, but it definitely gives a very difficult management situation, because pretty much for the last week, every single day, positions are going out of range, and you have to always readjust the positions to maintain the 100% asset ratio. So this is not a problem if you came to DeFi before from the assets and you are now participating in the market and making the assets work for you. Then it's all good because you had the assets anyway. So this is the same as just holding in the wallet, right? Instead, you are just making it work for you. But the problem comes for those that actually came to the market from the fiat currencies or USDC or other stable coins. And if you came with the stable coins within the last few weeks, and most likely you've deployed into the pool using only the range downside, no range to the upside, well, in most cases, on whatever asset you actually chose, you are pretty much at the very bottom of that range, maybe even already rebalanced once. So you bought a lot of crypto asset, ETH, SOL, SUI, whatever you bought, whatever you deployed into in USDC, now it's went down, so you basically accumulated that asset. And it's also not a problem if that was the goal, but if the goal was just the cash flow and capital protection, then it's a little bit uncomfortable situation right now, because you have a pretty big pending impermanent loss in percentage value. Whatever the amount is, what's big for me might be not big for you, and vice versa. So I'm speaking percentages, okay? So you are now, if you deployed USDC range down and you gave the range down, let's say 10-15%, the market is down definitely more than that, which means that you are already bought the asset, even though you bought it on a DCA method. So the average entry price is not that bad, but still, if your goal was not to buy a lots of crypto and only maintain just a cash flow business, so to speak, now you have to wait it out, so to speak. So it might look bad. There is nothing bad in the situation. It always happens when the market is basically not moving up, right? We always want the market to move up only, but it's not the case. It's not moving always to the upside, meaning that, well, sometimes these situations happen, and good management and good emotional, psychological reaction to that is the key. And if you deployed stable coins, range down, no range up, exactly as I showed you, I teached you throughout the whole DeFi house, so for so many videos, you bought the asset at a better prices, so it's not bad anyway, right? Now you have to wait it out. The market macro view is not changed. We have to survive pretty much the next 12 days, more or less, because that's when the whole Fed is finishing the tightening, the QT, and the easing process will begin. And basically, in my opinion, it's going to be a pretty bullish end of the year. Maybe we will see, because I don't like what I'm seeing right now, but it's not changing the macro. They are trying everything in their power to push the prices as low as possible, so to clean out as many people as possible. And you may say, well, what's the point, right? The point is that currently, and this not happened before on such a regular basis, also because currently in 2025, especially the last part of 2025, the last 6 months or so, we are seeing the highest amount of leverage in the markets ever. Everyone, from a simple guy, the average Joe, to the whales, to investment professionals, everyone is jumping on this with leverage. And trust me, they are taking insane leverage. Even the guys with years and years of experience in financial markets are executing BTC longs with 20-25 times the leverage, already with, let's say, $250K, and they're taking 25 times more and executing these positions. So we have an insane amount of leverage, and this gives stress to the system, the whole platform's liquidity issues, so to speak, and at the same time it gives an enormous profit opportunity for the exchanges and platforms, market makers, everyone. That is why these constant flushes of leverage is happening, and it will continue to happen till specific things are met, and then the conditions for the investments are becoming better and better, so to speak. So situation is not beautiful on the charts if we look short term, but they are insanely beautiful if you look long term. Okay, so even if you have some pending impermanent loss right now and you are like seeing, oh my god, I changed the range, it's out again, the same is happening, don't worry, this is normal. You are able to rebalance the pool with no gas fees pretty much at all on Solana, Base, Avalanche, whatever, right? It's cheap to change the range. There is no problem doing that. So you can do that as frequent as you want, right? It's just a hassle psychologically that, oh my God, I'm in a bigger loss right now, so to speak, right? Theoretically, so I have to rebalance again, right? If the market would go out of range from the upside, you wouldn't feel any negative association with the market. You would be like, oh, okay, so it's going up, let me change the range, blah, blah, blah. Maybe let's exit the pool, keep the asset, swap back to the asset, keep it, or redeploy. You would think differently if it's going up. But when it's going down and you see less value than before, well, that's the emotional triggers. But there is nothing to worry about. Even if we transition to the bear market right now, which is very unlikely in my opinion, even if that's the case, well, we readjust, right? We hedge, readjust, and we get back on track, yielding, getting smaller ranges, more assets, more we would take more volatility to extract the higher yield and eventually throughout time recover our impermanent loss, so to speak. Okay, so if you have questions regarding these situations, message me. But what I'm seeing on the community and from your messages as well, private messages, you are managing it extremely well. You are not panicking, you are not shouting, oh my God, what's happening? You are actually deployed on a professional manner and you are managing on a professional manner. I am not speaking about the degen type pools, those are a mess, but there is nothing you can expect from them. High risk, high reward. For now, you have to constantly rebalance all of the degen pools, and I would even say get a bit of a more range downside as well, which means that you would have to sell the degen shit coins at a pretty bad prices, but give them a breathing space and just grind back the yields because they're high, the volumes are high, the prices are going down. It's not the best situation, but you have to deal with it. Okay, so if we look from the weekly perspective, is it super bad? I don't think so. Well, we had a nice move up and down, up and down. We will settle somewhere anyway before the next move up, in my opinion. I'm not saying this is going to happen, but I do believe this will happen and we're gonna see ETH way above the all-time highs. That's my opinion. I can't tell you when, right? And if someone tells you that they know when it's going to happen, they're lying to you, or they work in pretty secretive government institutions, right? But even if we look from the weekly perspective, as you can see, well, we had a spike before and we are retesting the spike, so we are still within the area of this volume, so to speak, and we are still within it. We are not way below that, so it does make sense after such a spike. As I told you before, in most cases you're gonna see the retest of at least halfway. Now we are seeing the full-on retest. It's still pushing the price down. It's not beautiful, I totally get it, but we can only adjust our strategy to what the market is doing. If we cannot sustain any of these prices, it can get a bit messy. Looking from the current perspective, what I can see is this area right here is the next logical one for the market to attract itself into if we cannot reject this previous area. Okay, then this can happen. And to be honest, well, I don't like doing this, but let me add the fib. And I would like to add a fib from the linear chart perspective. Technical analysis is not something I deeply believe in, but I know that the market reacts from those areas anyway, so I'm just gonna show you. So if we placed a simple fib from low to the high, we are now sitting exactly at the area of rejection. This whole area right here, the brush, this whole area right here is exactly the area of rejections in these cases towards this area and then this one, 6, 7 and 5, 7 more or less, which is a possibility. So the market can still go into the region if we look from the fib perspective, which, I mean, it's weird, but it's working sometimes, especially for the crypto charts. It is not as accurate on any other market, but crypto is pretty new still, so these TA elements in a way works. So I wouldn't be scared of the current situation, but it's not beautiful. Now Bitcoin is still, as you can see, as I draw before, this area that we could see on BTC, it's exactly now within it. It's already almost halfway in, so it could bounce from any of these current prices, starting from the current 94 to 91,300. It could bounce from any of these areas right here. So once again, if you look from the higher time frame perspective, does the current situation look bad to you? if you look at the macro, there is nothing bad happening, right? The previous rally was, we can even take a look from here, it was approximately 100% and 133 days. Current rally that happened is 70%, 175 days. The pullback was 31% for 77 days, and the current pullback is 25% for 56 days. So we can still, I mean, this would align pretty nicely with the 30% more or less area before bouncing back up. And on a daily perspective, if we following the TA, the technical analysis area, the breakout above this chart, this trend line would mean a pretty nice confirmation of possible rebounds back to the all-time highs. And even if we apply the same thing on a linear chart from the fib perspective, look at that very precisely within the area 666 and 888 is the area where the market might bounce from. So we are now within specifically that region, and we could bounce towards 138 to 154 if it happens, right? And so far the price action suggests that it will, but it will require some time as well. SUI is just, it's melting, to be honest, and it makes sense because SUI is, in comparison, is not such a blue chip asset. It's volatile, and it wasn't that volatile throughout this whole period. Right here it was like 30% for almost a year, more or less, and now it basically lost 55% of its value in 43 days, more or less. So it's pretty insane, it's pretty active, but it also makes sense because when the market is going down, when the blue chips are going down, these assets like Solana, SUI, AVAX, the bigger layer 2s or layer 1s, but the smaller ones, they will suffer way more, because if ETH is down, all the L1s and L2s, especially ETH layer 2s, will follow that much more stronger because they are lower market cap coins, so to speak. So it just always, whatever happens, it happens stronger on smaller, big but smaller coins in comparison to BTC and ETH and XRP, for example. So, but when the market rebounds, also ETH, BTC is going up a bit. All of these, SUI, Solana, AVAX, whatever, is going up with way stronger. So we just have to catch the moment. But I don't like that we are not maintaining this region as well. It's just ignoring everything and it's just melting down. So I wouldn't catch a falling knife, just let it settle. It looked like we are settling here on SUI, but because BTC is still messy and downside driven, it just reversed back to the downside. So, well, we can't do much. We have to wait it out and rebalance the pools. If you have an active position, as I do, I am just constantly rebalancing SUI to cover the current price without any downside range. And, well, you will catch it eventually. You will catch it, right? So you just do what you have to do, keeping the yield active. If it goes out of range, give it a few hours. If it's not coming back, rebalance and do the same thing with all of your positions if you have to. Okay, now Solana 136. Well, we are chilling within this area. It's a pretty big area. I would even mark it like that, because as you can see, lots of volume and liquidity is within this area. So, well, we are now in here once again messing around, and I believe that if we stop dropping, we could settle for a few days like that for a few days before making any next decision, which should be back towards the highs, so to speak. We just have to wait through November and then see what the Fed is doing, how active the Fed is, what kind of decisions is driven, and what, of course, Mr. Trump is going to say. Okay? But I don't see this becoming a very bad, negative market moving forward for months and months. I don't see that happening yet. I even believe that 2026 will be a pretty strong year for crypto, especially knowing all of the adoption, stable coins, the change of financial system, the shifts, everything that's happening. It's not a time to be very bearish. Short term, yeah, whatever happens, but you have to always look at the brighter side and see what the macro is doing. And the macro is just getting started. It's not started. The bull run or the bullish momentum in the risk on assets, it's about to start. So we are still under pressure, so to speak. So let's see, right? These are the charts. AVAX is just insanely, it's performing really poor. As you can see, it lost 60%. But if this doesn't sound obvious to you for a buying opportunity, I don't know what will. Of course, 60% from the highs before we actually step into the season of easing policies on central banks, rates cuts, right? And the whole financial shifts, integrations, tokenization, etc. Well, all of these assets, SUI, AVAX, Solana, XRP, ETH, is now at a prices to accumulate for long-term perspective. You can buy some, lend it out, borrow against them, and just deploy to the pools. It's a pretty decent strategy. Looking at the rest of the market, well, it's just another day of about 5% drop, and probably towards the evening is going to leave a spike back to the upside, or a close pretty break even, or maintain this momentum for the next day or two before seeing another impulse back to the upside. That's it, right? Now, if we back to the data, and if we look at specifically DeFi stuff, as you can see, I have a DeFi Llama. I'm paying for my DeFi Llama subscription to get you some data, and of course get the data myself. So if we look at the data of the general DeFi dashboard that I've created myself, for myself, and to show you as well, if we look at the chains, as you can see, well, most of the chains are seeing on a 7-day matter, on a weekly matter, a bit of a outflows from TVL as a chain itself, right? As of today, there is nothing new, no inflow, no outflow, so it's not that bad. But over the last week or so, we are seeing a bit of outflows from those chains. Solana minus 1% is not that bad. It's maintaining pretty well. Base minus 6%. Plasma, I'm pretty much ignoring because it's usually stable coins and stuff. And BCC is losing TVL, which makes sense because Aster is bullshit. And most people came to BCC for Aster and Pancake liquidity provision, which turned out to be bullshit. And as I said, Aster is a BS scammers project and coin as well, backed by Binance heads. So I don't know, it's just it makes sense seeing it's losing value. Now from the centralized exchanges, as you can see, most of them are seeing inflows. Of course, Binance seeing the most, 7-day 2.4 billion, 24 hours 2 billion. So it's just insanity of the inflows that these exchanges are getting, especially Binance. As you can see, it's 2 billion, and then OKX at number 2 is 300 million only. So Binance is getting these things. Well, it's a combination of things, but part of this is involved with all the liquidations. Binance is responsible for all of these dumping. They're sending funds to Wintermute. Wintermute is then selling on behalf of Binance so they can liquidate the people. So they are pushing the spot prices down through selling millions and millions and millions in value. Then the future contract prices also going down through shorting, etc. And then they're liquidating the users, getting their money back, so to speak, through liquidations and rebuying the assets below. It's the constant flywheel. It's pretty illegal, so to speak, but well, who cares, right? Trump is pardoning CJ, or whatever he's called, CJ, and it's just a big game. But when you read it, when you understand it, it's not, at least you are not stressing too much when you see these situations, right? So what we're seeing so far, it's dirty, it's not beautiful, but it's the game. So we have to play the game by their rules and stay on the smart money side, right? Now, over the last 30 days, with the current numbers, as you can see, Orca TVL is maintaining pretty flat. It's been higher over the last 30 days. We lost a bit of TVL, but it's not too bad. The volumes are pretty nice as well. 318 million over the last 24 hours. And if you look at the monthly perspective, we had the ups and downs, and the ups are usually when the market went really bullish or bearish, so to speak, depending on the side, but the volume is increased on those periods. So now we are seeing the lowest points of the volume, as you can see here, and here for the last 30 days, and still the yield is pretty decent. It's about 0.3% for about 25% range. The fees, $500,000 in fees, plus 50%. So over the last, and this is the 7 days average. So the average is about $500,000 in fees on Orca, and it's up about 50%. So it's not that bad. So I mean, volumes are increased, as you can see. This time, those 7 days, it's most likely throughout this period of time when the volume was high, so the fees were increased as well. And the growth of the volume is minus 35% over the last 7 days, which is this drop right here is very clearly visible, as you can see. So this makes sense. Then we have the similar approach to Radium, and Radium has a bigger TVL because Radium hosts most of the meme coins as well. Even the biggest ones of the meme coins, the pump fund launches, everything is mostly happening on Radium. That's why you might see that it is generating similar volumes and fees, but most of those fees are coming not from Sol USDC pool or the major pools, but it's coming from all the smaller pools, which we are not participating in because they are too degen for us. So Orca fees, most of them are coming from the biggest pools, so that's what I prefer. I prefer people trading on a blue chip assets, in high volume, rather than all the meme coins and degen stuff is going up. So it means that most people switching between Sol USDC and similar blue chip assets chooses Orca for those transactions and not Radium. PancakeSwap, as you can see, maintaining the TVL over the last 40 days, but the volume is down 72%, which makes sense. All the Aster guys are leaving. Then the fee is also minus 40%, and the growth is just, I mean, you can see last 7 days is minus 87% of the volumes. So it's just, I mean, it's on a massive downfall, but I said that before, that there is no point getting involved in PancakeSwap because it's just this one-time fun. It's been pretty shit before. Then the Aster things came, and the Aster things left, more or less, so to speak. I haven't checked actually what's happening here with this Aster stuff. It's 119. Yeah, so as you can see, it had a massive run, drop, and now the volume is dead, absolutely dead. So 2.4 billion market cap coin has 8k volume on PancakeSwap. Can you imagine that? It's just insane. you have a lot of holders. Most of them are the bag holders right now. So from the highs, it lost 66% up to the current price, about 50%, but the volume is down, it's dead. So that's why everything on here on PancakeSwap is also down. Then we have turbos. DeFi Llama is not tracking yet the fees and the growth. So as you can see, we have 9 million TVL. We lost 9% over the last 30 days. And over the last 30 days, the volume is up, which is what I like to see. Even though some money went out, the volumes increased. And SUI is, of course, one of the main assets on turbos because it's been performing very well. And it's going down, but it doesn't mean that people are not trading it. It's buying, selling happening, and it's a clear proof that the volumes are increased. Cetus, which is another SUI DEX, 50 million TVL, also lost about 7%, and the volume is also increased. So the SUI ecosystem in general is pretty strong in terms of volumes, and we can see that on turbos because our pools are generating with about, I don't know, maybe 20-30% range depth. Is generating sometimes even 1% a day, which is just insane. The average sits about 0.4, 0.6, which is also insane. But of course, higher volatility involves situations like we have right now, where SUI lost 65% from the highs, the recent highs. So we have to also, adapt. But the fee's been really great. Most of it is covered. So it's not a massive problem if you are still a long-term holder of SUI. Aave, 33 billion TVL, maintaining it. Aerodrome has lost a little bit. It's normal based on the current situations. Sushi maintaining it pretty much. And Camino, the lending protocol, the biggest lending protocol on Solana, actually added more TVL. So more people, what they did, it's clear. They bought Solana and they lend it out and borrow against it. It's always happening the same thing. Usually lending protocols are either maintaining or increasing their TVL when the market is going down because people are buying the asset cheaper and lending it out and borrowing against it. So that's the stuff. And if we go to the chains currently over the last 24 hours, more or less, most of them are lost some value, but really, really small amounts, as you can see. So we could say that it's pretty break even across the biggest chains that we are monitoring. They haven't lost that much. SUI is not the most beautiful chart in terms of TVL, but most of them are pretty much the same. But key element is not just the TVL, it's also the volumes. If TVL is down but volume is up, the fees are great anyway. And we have the less dilution as well, because people are getting out of the chain or the protocol, so it loses TVL. But you stay in with high volume, it means that less people provide liquidity, more fees goes to you. Simple as that. So I think this is a pretty productive and good episode for the weekly DeFi finds. Hopefully you're gonna like it. I liked this approach really much, showing the charts, showing some data, giving some tips, just keeping it raw and simple. And moving forward, I will add a bit more markets. Maybe we will cover a bit more macro perspective, look at some macro charts as well, and see the correlations between crypto and those, and maybe involve a bit more chart analysis moving forward. But I'm not doing that till we have released the Candles and the Charts Academy by Rob. Rob is doing amazing job making all of this Candles and Charts Academy content. So you're gonna love it. You're gonna see how to read the charts, what each thing means, and then once you know that, we will be able to show that and actually show it live on a charts, and you will be able to read it as well, and maybe even use it to some short-term swing trading, doesn't matter, but additional operations outside of just liquidity provision. So Thanks for watching. Wishing you an amazing week ahead. We have a busy one, but all of the updates will go to the platform, and those updates are exciting ones, big ones, so hopefully you will love it as well. And of course, as always, I will see you inside the platform, and if you have any questions, make sure to message me on DeFi House, and I will reply as soon as possible. Once again, thank you and take care.